the net revenue. So this section would have net revenue, which is of revenue and less sales returns or return inwards. By doing this, you can find the net revenue. The next section is cost of sales. So under cost of sales, you have important categories. So remember, cost of sales, you have opening inventory, add purchases, add carriage inwards, less purchase returns, less goods drawings, only goods drawings, and then less closing inventory. Remember, this order cannot be changed. Opening inventory, purchases, closing inventory. These orders can swap between this range. So first we went through net sales or net revenue, which has the section of revenue, and then sales returns, or call it return inwards. Number 1, number 2, number 3, other income. You should know the items to be listed under other income, such as discount received, non-current asset disposal profit, rent received, commissions received, provision for irrecoverable debt. We can make it decrease in provision for irrecoverable debts. These items will appear under other income. Next, the expenses. I'm just taking few of the expenses here, such as non-current asset depreciation for the current year and non-current asset disposal loss, general expense, salaries and wages, discount allowed. So these are few of the examples I've taken for expenses. Now let's start with the disposal. Fixtures and fittings purchased on 1st Jan 13 for 7,500 was sold for 5,400. We have fixtures and fittings cost 20,000 and we have accumulated depreciation of 5,000. We did not have any purchases of fixtures and fittings. Therefore, let's show this in a table. You have non-current asset, fixtures and fitting. Opening balance cost is 20,000. No purchases at the moment. Disposal cost is 7,500. Therefore, the closing balance of fixtures and fitting should be 20,000 take away 7,500, which should be 12,500. Now, we had a depreciation opening balance of 5,000. We haven't purchased any, so we haven't calculated any depreciation. Disposal depreciation should be 1,875, which should be removed from the current depreciation, which is 5,000 take away 1,875 should give 3,125. Now, the challenging part is to calculate the disposal depreciation. Now, let's see how to calculate this. This fixture and fitting was purchased on 1st Jan 2013. So remember to take all the financial years up to that specific financial year. As you can see here, I've taken it from 1/6/12 to 30th 5/13, 1/6/13 to 30th 5/14, 1/6/14 to 30th 5/15, 1/6/15 to 30th 5/16, 1/6/16 to 30th 5/17, 1/6/17 to 30th 5/18. This is the financial year we are preparing all the accounts. Now, this fixture and fitting was purchased on 1st Jan 2013, which should fall under this specific financial year. Now, let's count for how many years it remained in the business. As you can see here, you have financial year 1, 2, 3, 4, 5, 6 years. However, the question demands there is no depreciation for the disposal of any non-current assets as per this specific statement. As you can see here, none in the year of disposal depreciation. Therefore, we do not calculate for the last year. That means we had used it for 5 years. And the depreciation method is straight line 5%. So we're going to use that to the formula. So cost 7,500 was the disposal cost, 5% of depreciation, and for 5 years if you calculate, it should give an answer of 1,875. Now let's plug in that to this formula in order to find the remaining depreciation for the fixtures and fitting. Now let's calculate depreciation for the existing fixture and fitting cost. So we have a closing balance of 12,500, 5% straight line method. Therefore, the depreciation for the current year for existing fixtures and fittings should be 625. Now, this should be entered in the income statement under the section of expenses 625. Now, let's move to the next adjustment, which is a motor vehicle costing 20,000 was purchased. You have motor vehicle at cost 50,000 and then accumulated depreciation 13,550, and the depreciation method is 10% reducing line method, and it states that a full year's depreciation should be provided if any non-current asset is purchased during the financial year. So let's plug in the values to the formula which I had given before. So the motor vehicle cost is 50,000, 20,000 purchases, therefore you have total motor vehicle of 70,000, and you have depreciation opening balance 13,550. Now let's take away 13,550 from 70,000 in order to find the net book value, which should be 56,450. Find 10% of it. That should be 5,645 income statement expenses. Now, let's write this value under expenses. Motor vehicle depreciation 5,645. Closing inventory 43,950. You into goods for personal use costing 2,500. As you can see here, I've color coded the cost of sales section in green. So you have inventory opening 37,150. That should be the first that should be listed under cost of sales. Secondly, purchases 185,375. Then you have the third one, carriage inwards of 3,625. Then it's purchase returns 12,500, which should be deducted. Closing inventory, you have, that's the last option, and you into personal goods for personal use should be number 5, should be deducted again in cost of sales. And then closing inventory 43,950, the last one. Now let's enter all these details under cost of sales. As you can see here, you have opening inventory 37,150, purchases add 185,375, return outwards or purchase returns you deduct 12,500, goods for own use you deduct 2,500, carriage inwards 3,625, and closing inventory 43,950. Now let's take the calculator and add the positive figures and deduct the figures which are in brackets, which should give 167,200. This should be the value of cost of sales. Now let's move back to the question and complete the net revenue section. As you can see here, you have sales of 329,500, sales returns 15,500. Let's plug in this to the format. As you can see here, revenue 329,500, return inwards or sales returns 15,500. Therefore, the net sales should be 314,000. Now we can find the gross profit from 314,000. Take away 167,200 in order to find the gross profit, which should be 146,800. Moving on, we haven't still found the profit or loss on disposal. Remember to use this formula in your exam if they didn't ask you to prepare a ledger for disposal. So we calculated depreciation for disposal, which is 1875. The selling price of the fixture and fitting was 5,400. Take away the cost, which is 7,500. So if you get a minus figure, that should be considered as a loss. If it's a positive figure, it's a profit. If it's a profit, you enter it under other income as non-current asset disposal profit. And if it's a minus figure, you write it under expense as non-current asset disposal loss. As you can see here, you get a minus figure of 225 and it's a loss. Therefore, now we enter this under expenses, loss on disposal. Now we have another two more items to complete. Wages and salaries owing. Remember, if anything is owing at the end of the year, it can be an expense or income, you add it. And anything which is paid in advance or prepaid, you deduct it. So wages and salaries owing 1350. So as you can see here, you have 38,650. And then you owe 1350, which needs to be added. Therefore, you should get the addition of these two for wages and salaries, that should be 40,000. Whereas for general expense, it's a prepaid or advance which needs to be deducted. So go to general expense, you have 24,375 as the opening and prepaid is 1125. Deduct that value and you should be able to get the difference as 23,250. Now let's complete the other income section. It's in grey. You can see you have only one other income in the question, which is discount received 1250. So let's enter this to the format, and there's another one more for provision for doubtful debt. We'll do it. Discount received 1250. Now the last adjustment for allowance for irrecoverable debt. As you can see here, you had opening a provision for irrecoverable debt 3,000 and it says there is a decrease in provision for irrecoverable debt of 750. So opening provision for irrecoverable debt 3,000 and at the end it's reducing by 750. That means it should go under other income. If it increases, it will go under expense. So let's enter this. Allowance for doubtful debt or provision for irrecoverable debt decrease should be 750 under other income. Now let's add up 146,800 gross profit plus 750 plus 1250, which gives a total of 148,800. Add up all your expenses and then you should get 69,745. You deduct that value. And from 148,800, take away 69,745. you should get the profit for the year of 79,055. Now, we have completed the income statement for you in Sole Trader.